What's up guys, it's Raymond here with another YouTube video. Today I want to talk about what you need to know before you invest in stocks and shares. So if you're just getting into stocks and shares, investing in stocks and shares, there is one thing you're going to need to have if you want to be successful. It's kind of two things. So the main thing is that you need to have interest in the stock market and interest in business, because if you're investing in a stock, the best way to do well is investing in great companies. And it is good to remember that you are investing in parts of the company. You're not just investing in tickets that you inevitably will sell in the short term. The best way to invest in stocks and shares is to invest in the long term. That way, and it requires a lot of temperament and a lot of patience and a lot of strength of psychology to be able to do that, because the price of your shares will go up and down. And you don't want that the price of the shares going down to discourage you from buying new shares or discourage you from keeping the shares that you have. So you need to trust your judgment, but first you need to do research, and that's the main topic of this video. Research is the most important thing that you're going to need as a skill to be able to choose good companies to invest in and to stick with those companies. And what do I mean by research? So you need to be able to understand the company and the sector you're dealing with, not only the company that you're dealing with, or the prospective company you want to deal with, but also the sector that the company's in, because each sector has their own components, and each sector has their own is filled with businesses that compete with each other. So you need to know the competition of the business that you're dealing with. That's one of the things. So take for example Premier Inn, which is a small hotel company which is created in the UK. It's expanding very fast at the moment, as of 2018. But then again, you need to know its competitors like Travelodge. Travelodge is currently a larger hotel chain than Premier Inn is. So you need to see what effects Travelodge have on Premier Inn and vice versa. So if I want to invest in Premier Inn, then I need to know that Travelodge not only is a bigger company, so it's a large threat to Premier Inn and its hotel chains, and its potential for expansion, but also the potential for Travelodge to take clients and customers. So if Premier Inn makes a mistake, it might be more detrimental to me. It might be more detrimental than if Travelodge were to make a mistake, because Travelodge is a larger company, so they have more of a chance of more of a chance to get back on their feet if they make a mistake, as opposed to Premier Inn, because Travelodge may have more investors backing them than Premier Inn may have. So make sure you research the sector you're trying to invest into, as well as the specific company you're trying to invest into. Make sure the shares of the company you want to invest in are a decent price for you as compared to other options, because you want to get the best deal possible, and that includes getting a cheaper price as compared to paying a higher premium just to be able to get just to meet your return benchmark. So that's the topic of this video. Very short, but it's just a quick thing that I learned today, because when I first started investing in stocks and shares, which wasn't too long ago, I mean, I went based on the size of the company and its reputation and being known for a good company. That's pretty much all. Then I started to look at the share price volatility every day, the share price going up and down, and how the performance was doing over a short period of time, which isn't the best way to do it, but it is necessary, and it is important for determining the long-term return and the long-term performance of your selected shares. So it's good to look in the long term and the short term, but then don't be discouraged as well, because if you're going to end up being discouraged, and you know there's a possibility of you being discouraged by the share price of your company going down, then don't buy the share, because you're just going to end up losing money. I mean, there is a lot of money that goes into buying shares besides the price of the share. I mean, dealing charges, commissions, trade, I think it's called post-tax, but there are a lot of charges, and you don't want to waste your money be discouraged by the share price going down. So wait a very long time, and you are investing in a business. The more you get that into your head, that you're investing in parts of a business that you need to be involved in, although you may not be an employee, you are investing in the shares, and the shareholders, as well as the managers of the business, are relying on your funds to be able to run the business and create more profit. So have integrity in yourself and trust your judgment, but make sure you do research to be able to trust your judgment. Don't just trust your judgment based on instinct. Make sure you research the business, the ins and outs of the business, the managers, the employability rate, the scalability, and how long, much society relies on the product of the business. For example, toothpaste and mouthwash aren't going to go out of business for a very long time. Coca-Cola isn't going to go out of business for a very long time, and they're fairly easy businesses to run. I mean, the profitability of a company like Coca-Cola can be vast. I mean, and it can even increase over time because the price that it costs to make Coca-Cola can decrease, and at the moment it's extraordinarily cheap as compared to how much they're selling each product for. I mean, Coca-Cola is one of the largest brands in the world, and they sell all over the world. They create their product cheap. Their product has their product is a brand that's been created as a trademark. Lots of people love Coca-Cola. They prefer to spend more money on Coca-Cola as compared to cheaper brands that might taste almost exactly the same. But Coca-Cola has established a large fan base and a large following that people usually instinctively go towards what they've been buying for a long period of time. So, as I said, research the company that you want to invest in, or that you're interested in investing in, and make sure you use that knowledge that you find to base your judgment on this, as well as including the price as well and other factors. So, guys, I hope you've enjoyed this video. I will be creating more videos based on common sense, or not common sense because this isn't so common sense, based on helping you guys to make your lives easier without having to make mistakes that a lot of people make. And I hope you guys have a profitable and knowledgeable investing career, and I'll see you in the next video. Peace.